Today, I want to talk a little bit about my own trading strategy and how I find the trade setups, the places where I'm going to decide to enter and exit the market. I believe that my strategy encompasses core concepts that really any trader, Forex trader, must master to become consistently profitable in the market. First, a little bit about me. I know that Reed just went over a little bit, but just a little bit more about me. I've been trading the Forex exclusively since 2002, focusing all of my attention to this market alone. And for the past 6 years or so, I have been providing daily market analysis for 7 major currency pairs that include the US dollar through Forex Traders Daily's live trade room. You know, folks, right now is a really exciting time to be involved in the Forex, even with the craziness going on around the world, the Greece situation and whatnot. People are making amazing profits trading currencies in the Forex. Recently in my trade room, I had a trader that was just at the end of his trial period in the trade room, 2-week trial, and he told me that just in 2 weeks he had been seeing a 27% gain in his account. Now, that's not, of course, typical, and it's amazing. That's not, of course, typical, but all he did was follow the simple strategies that I lay out in the trade room on a daily basis, and I'm going to show you some of that today. And by the way, at the end of the webinar and my time with you today, I'll give you the opportunity to access some of my daily analysis for free. Again, what I want to do today is show you some of the basic strategies that I use to trade the Forex market every day, to make decisions to be long or short or get in and out of my trades. In just a few minutes, I'm going to pull up the actual charts and show you some examples just from the past few days of some of the trades that we've been taking. But first, take a look at this thing from Benjamin Franklin. He's been quoted as saying, "Tell me and I forget, and I may remember, involve me and I learn." You see, trading itself is an activity. It's not really a spectator sport. You must roll up your sleeves and get your hands dirty, so to speak. And until you do that, you can't really truly understand what it means to be a trader. So no matter what strategy you decide to employ in your trading, mine or somebody else's, it will really be the practical application of that strategy that will be a true test of your understanding. You know, let me be clear. Trading and technical analysis itself takes time to master. First, you have to develop a strategy, either on your own or copy someone else's. Then you have to master that strategy, ideally before putting your own money at risk. So the question is, where are you going to start? Well, what I found out early on, mostly by trial and error, is that there's an overwhelming amount of information, trading information out there, and you've probably had a lot of that overwhelming feeling today and throughout the several webinars you might have been listening to today. And it's kind of a daunting task to sift through it all and figure out which is going to work for you. You know, just take a look at this list of technical indicators available to you, and you've seen a bunch of these today. This is, of course, just a few of those indicators that are out there, and there are dozens to choose from. And as you may have seen during today's webinars, and as you look through them, there's multiple variations of many of these indicators, like, let's say, moving averages, not to mention different interpretations of tools like Trendlines. So just how do you decide which one of these to use? Because you could spend months or even years trying out each one of these, and you might have some success, but more than likely you're going to have a lot of failure. Now, I'm in no way saying that all of these are bad, of course, because used correctly in the right market conditions, each one has some value. But just think, if you tried to apply only half of these to a chart, you could barely see the candlesticks on the chart for all the lines and the bells and the whistles. So how do you whittle this list down and begin developing a winning trading strategy? I would say there's really 2 critical factors for making money consistently in Forex trading. And this comes from my experience. First, my suggestion is to keep it simple. Pick just a few indicators that are available, maybe from that list, and this could be 2 or 3 or 5 of them, but pick ones that make sense to you. And then you're going to want to master them. You see, it's going to be better to master a few than to be a slave to very many indicators. And then, of course, when choosing those indicators, what I suggest is that you're going to pick ones that are well known, ones that a lot of traders use. First off, it's because you will find more training and information on how to use them than you would a lesser or uncommon indicator. And second, there's a reason why it's a common and widely used indicator, because used correctly, they work. So what I'm saying is, don't try to invent the wheel and do something different. Use some things that are common. And when you finally settle on a few of those indicators, master them. Become their friend. Get to know them inside and out. The better you understand how they work, the more useful they will be to you. And then when you've settled on a few of those indicators, develop a strategy around using them and be consistent with that strategy, employing the strategy the same way all the time. You know, some traders, especially new traders, often think that consistency means you're going to win every trade or almost every trade, and that's not really what consistency means. Even when you are a consistent trader, you can and will, of course, have losses. So you must develop a strategy that works consistently over time. You know, trading is not one trade or 10 trades for that matter. Trading is something that you work over dozens or even hundreds of trades, and if you follow a similar strategy over time, that's what consistency is. And keeping with that simplicity, I generally stick with the major currency pairs. I live on the East Coast of the United States, so I generally trade during the U.S. trading time. I look at them somewhat like indicators. You know, there are a lot of currency pairs to choose from, and some of them are more volatile than others. Some have higher trading costs than others. Some will make you more money per point, and some will make you a little bit less, but each has its own personality. It might even be you just want to trade the currency of your homeland, and that's fine. And it depends on your time zone that you're in, maybe. That depends on the currency pair you decide you want to trade. But what I would say is pick ones that best work for you. Get to know the personality of the pair. However, whichever pair that you choose or pairs that you choose to trade, the trading strategy, the rules that you apply to each pair will likely remain the same consistently. And then you apply the indicators of choice. And for simplicity and the sake of time in this webinar today, I'm going to discuss support and resistance. Now, I know you've probably heard a lot about support and resistance today and different ways to develop for support and resistance, but I don't think it can ever hurt to hear a different interpretation of something so basic like support and resistance, because it's the foundation of many strategies out there. So let's talk a little bit more about that today. These are the basic, what I like to call bumps in the road, so to speak. However, there are many different indicators that you can use to identify these bumps in the road. First, of course, you could simply draw a horizontal line to represent historical levels of support and resistance, but that's just really the beginning. Additionally, as we've seen in previous sessions, you could use Fibonacci to mathematically identify these naturally recurring levels of support and resistance. And if you're not sure, I'm sure you can figure that out by listening to some of the other previous sessions here today. But that's really a whole other can of worms if you're not sure what I mean by Fibonacci. Anyway, you could also use pivot point levels that calculate potential support and resistance using historical data from the previous day. You could also use a multitude of variations of moving averages that project support and resistance based on price averages. But whichever you choose to use, they are all primarily doing the same thing. They are identifying potential barriers in the market. That's really what we're trying to identify, is potential barriers in the market. And these are fairly easy to identify once you know what to look for, which in turn, like I said before, makes them a widely used common tool or indicator. And what I like about using support and resistance is that you can often look back in time, days, weeks, or even months, and sometimes even years, and find that the market has recognized these levels over and over again. So as with any barrier in the market, there are really two potential scenarios that go along with those barriers. And these are going to be the key decision points that you're going to need to recognize when you are deciding to take a trade or not. First, of course, is a potential bounce. This is where the market stops or stalls for a period of time, maybe short or maybe long, and reverses and goes back in the opposite direction. And of course, the next scenario is a potential break. And this is when the market passes through a barrier or a bump in the road and continues in the direction that was previously moving, or we call that the trend. And that's really the crux of it. There's these two potential scenarios at each one of these barriers, and that's as simple and as common as we can make it. And I think the best way for me to explain how I interpret support resistance is really just to go over to the charts, and I'm just going to bring up the live charts and demonstrate how I, on a daily basis in the trade room and in my daily analysis videos, identify these barriers in the market. So give me just a moment, and I'm going to switch my screen over to the charts. And I want to identify a couple of the levels that we looked at this week and actually took some trades at. Just want to be sure that my chart is showing on your screen. So if you could just give me a quick yes or a go signal so I know that the chart is switched over properly and you're seeing my chart. Okay, looks like everything's working as expected, so thanks for that. All right, let's start here on the US yen. This is a currency pair that we have been trading in my trade room and in the daily analysis videos for a couple of weeks, and we've been buying this currency pair in the trend. Now I'm going to start all the way out here on the weekly chart because I think it's always important to get a handle of what the big market, the larger players in the market are doing, and that's really what support and resistance is, and I'll get more into that in a minute. But overall, for a long period of time, this currency pair has been in an uptrend. We go all the way back to 2011. The US yen has been in an uptrend. Not too hard to see that. So if we're going to trade the direction that the wide market, the big money, has been sending this currency pair, that would likely be looking for buying opportunities for the US yen. So that's not too hard to see. Now let's take a couple of lines here. I just want to put a couple of horizontal lines to represent areas that you might consider decision zones in the market. And what I mean by that, and let's just look up here, and let me zoom in one time. Look up here, right underneath where I'm going to put a black X. You can see right there, that is a decision zone. Now, typically and generally, you're always going to hear people call these levels of resistance. And I will agree to that. That is a level of resistance. But I like to term them as a decision point in the market. What do I mean by that? Well, a decision point is where buyers and sellers are exchanging hands, okay? And when I say that, when we're looking at a chart like the weekly time frame, I don't mean you and me, small investors. Remember, there's trillions of dollars in volume in the Forex market being traded every day. So people that are trading $5, $10, $50, even $100,000 in the market, in the Forex market, are really just small potatoes. They really have no influence on the market. When I'm talking about people that are influencing the market, we're talking about the world banks, larger funds that are investing millions of dollars in the market. And that's really what causes support and resistance. That area right there where the black X is and the black horizontal line is a point in time where the big money, the people that are in control of the market, exited buys and entered sells, or exited their long positions and entered short positions right there. So if they're doing that, if the big money, the people that are in control, are doing that at that price level, then we have an expectation that we would want to do something very similar to that in that area until it pushes through there. So just a few weeks later, you can see it came back up into that area and gave another opportunity to see resistance, or a decision point where the big money made a trading decision to exit buys or longs and enter sells or shorts at that same time frame. Then over time, we could see that the market just a few weeks later pushed through that level there into the low 121s, and then a few weeks later made a new high and came back down and used that same area as support. So now when the market comes back down to support, we can identify this as a decision zone again, where the market is making a decision to enter or exit, buy or sell. And that's really what we want to take away from this on the weekly time frame. So even if you're a shorter term or intraday trader, or consider yourself a short-term trader, or maybe even a scalp trader, these are the decision points where you might look to make those types of decisions. When it's on top of that horizontal level, then you don't really want to be looking for selling opportunities because you know there's a high probability of support. When it's underneath that level, you don't really want to be looking for buying opportunities because there's a high probability of resistance. So that's kind of a broad sense, is that we're looking for these decision points in the market where the big players are making decisions, and we want to somewhat mimic that in our own trading. Let's take all that information down to the daily chart. And again, we can see those same areas here, and we can begin to look for other tools that identify these barriers. Again, we can take trend lines that help us identify these barriers of support in the market where the market is going to make a trading decision. We can take another line and put it in here somewhat like this. And we basically, what I like to do on a daily basis is highlight these zones of support. If we go back to our black X's over here, you can see there was an area here between 120.75, the bottom black line, and 121.40 or so, the top black line, where the market stretched into there and then reversed, snapped back like a rubber band. Then here it found support, or sorry, resistance right at 120.75 and went back down. Then it came back up into that same zone. So what I'm going to do, it typically is what I'll show you is a zone of what we'll call historical resistance back here on the left-hand side. And we know that the market had a very difficult time getting through that zone of resistance. So until it breaks that barrier, we know there's resistance here. And even a few days later, remember now we've moved down to the daily time frame, a few days later, it took 3 days before the market could actually push through that same zone. So again, as I said a few minutes ago, as long as we're underneath there, we don't really want to buy it as it approaches it because remember the old saying, buy low, sell high? Well, I would say flip that into a little bit different. You want to buy support or sell resistance. So as long as it's underneath it, that is resistance. But once it broke above it, we had some confidence that it was going to find support because people tend to do something very similar. Traders are creatures of habit, let's say. And really, that's why tools like Fibonacci can work, is because they're identifying naturally recurring patterns. And people are part of nature, and we do things in patterns. We do things that are very predictable often. So on the left, where the two black X's are, and the decisions were made to exit buys and enter sells, once it pushes through there, that same price zone now becomes an area for support. Now we can use other tools to identify other reasons for that. We've already put a trend line in there. Zooming it in one time, again, we could take some tools like Fibonacci to help us identify that levels that will be barriers. And just taking just a quick fib from one of the last lows that you see down here to the most recent high, you see the 618 fib, 0.618 Fibonacci retracement level sitting right there at the top of the purple zone. But we know that that entire zone has the potential to be support. So anywhere within there becomes then a buying opportunity, and you begin looking for it to start working its way back up in the direction of the longer-term trend identified by the black trend line. Now, for a few weeks, it was moving down, and we can see that coming from the high. We'll just put a quick trend line in here like this, and let's turn that one a different color. For a few weeks, we could see that the market was moving down. All that does when the market's moving down within an overall uptrend is gives us a better buy price. What do I mean by that? Remember that old saying I just went across a few minutes ago, buy low, sell high. So if the trend is up, the overall long-term trend is up, the lower it gets becomes a better investment opportunity for buying. So we know that once it reached down into that decision zone, into the upper 120s or the low 121s, became a buying opportunity. Then the next thing you know, just over the past few days, we saw it push through that red trend line. That gave us a clue that we were looking for the market to continue to pressure higher in the direction of our current momentum. We can take those same decision zones, even here on the daily time frame, and begin to get some more detail, let's say, into the chart. Let's take the Fibonacci off because I don't want you to think that this is based on what we're looking at as Fibonacci levels, but all I have to do is to go back in time just over the past few weeks and note here that this area right here in between these two black lines was support. And let's highlight this so we can make sure you understand where I'm looking at. Let's go back here, and I'm going to change the color of this so it's a different one than what we were just looking at. Back here, that was support back there. While it was on top of it, that was support. And you can see the market coming down several days in a row. Then it got underneath it, and the market found resistance. So we can know with some certainty that as the market approaches there again, there's resistance. And now, over the past few days, we have been buying this currency pair. We know that it will need to break through this barrier. Remember, each one of these zones of decision, support and or resistance, has two potential outcomes. It's either going to bounce off of it or it's going to break through it. Well, a couple of days ago, it bounced off of it, and now our anticipation is that we'll look for the next breakthrough and working its way back up to the next resistance. Another area that we can look at, we've identified this week and traded, actually entered this week, was this area right here. And again, all we're going to do is highlight this area, and we know that these are going to be our zones of decision where we are going to be looking to get in or out of our trades. And we can see back here, it was support, then it turned into resistance, and then just over the past few days, right here, we can see it as support again. So that's going to make a lot more sense as we even get down to the 4-hour time frame. And again, there's the red trend line. It was continuing to pressure lower. We could see that the market was bouncing around between the green and the yellow shaded area for some time, eventually got back underneath it, pushed through the red trend line this week. Our buying opportunity happened right here, and this is where we got into it this week, was this area right here where it came back down and settled back down into our support zone into the low 123s. Our actual entry was just above 123 this week, and we were able to capture profit as it began working its way back up into the next decision zone, which was the green shaded area. Another area that we're looking at as our next potential resistance target is going to be highlighted back over here on the left-hand side. We can see right here where the market, and I'm going to change the color of this one also. Let's make it this blue color. You can see back here where the market found resistance, finally got underneath it, found resistance again, and now that becomes our next potential target. If the market can stay above 124 this week, we'll look for continuation towards the next area of decision where the market has consistently made trading decisions to enter, exit, buy, or sell. So our entry this week was the blue circle, and we're now looking for it to break through the green shaded area and continue to go higher. And again, this is a very simplified strategy, and I give you more details on a daily basis of how I develop these shaded areas and these zones of decision, but that really gives you an overview. Let's take a look at a different currency pair, just so you can see that this isn't some kind of fluke or something that, you know, is something very mysterious. The market tends to make decisions at the same levels quite often, and we can use them as our barriers. I often equate this in my trade room to speed bumps. You know what a speed bump is. You're driving your car, of course, you're driving your car, and you approach a speed bump. What do? Well, you slow down. That's what most people do. You slow down. And then, how do you have confidence when it's time to accelerate again? Well, your confidence comes that it's time to accelerate again when you get all four wheels on the opposite side of the speed bump. So we can have confidence that it's going to accelerate again when it breaks through that barrier or that speed bump in the road. So again, we can identify levels, and I'm not really looking over here at the right-hand side. I can tell you with some certainty over here on the left that there was resistance. That's fact. There's not something I can even begin to make up. That's fact right there, that the market found resistance where the blue shaded area is. And we can, with some certainty now, bring that over and say we knew this week that there would be resistance there. And only if it broke through that blue shaded area would we expect it to go higher. So would you want to buy it? The question would be, would you want to buy it underneath 2780, 2750, which is that blue zone, or would you wait for it to break above it? Of course, this week we had interest rate information out of Canada, which caused it to go up, but the idea here was that you didn't want to buy it unless it broke through there. Okay, over the past couple of weeks, though, there was another opportunity to buy it as it broke through the last area of resistance and support. We can see right back here where the market found support, clear support back here. And let's make this one, again, let's change the color. Let's make this one this yellow color. Okay, so you can see back there it was support. It became resistance again. So this support back here became resistance. We knew with some certainty that if it ever broke above that yellow shaded area, we would be looking for it to go long or continue to go up. And you can see what happened. It finally did, just like driving your car. Again, open and close above, all four wheels above the barrier of resistance. It continued to pressure back up in the direction of what has been the trend. Let's take it down to the 4-hour time frame. Again, you can see the opens and closes. You can see the market pressuring as it pushed higher. You can see this week it found resistance into the blue shaded area, finally pushed through it, And now you're probably asking, well, what's it going to do now? Because we're at the very peak high of the trend. Remember, buy low, sell high. Well, I think if we're going to buy this again, it's going to need to make a little bit of a pullback. And that's where tools like we've just been looking at come into play. You can throw a little bit of congestion right here. You can see the market found some resistance there before continuing to pressure higher. Let's throw in a little highlight right here, and let's make that one a different color so we can tell the difference between them. We'll make it this purple color. And so you can see right there, as long as it stays above this area that I've now highlighted between 129.40 and 129.12, the expectation is that we look for a continuation of the uptrend. If at any time it pushes underneath there, we already have an idea. It breaks underneath the barrier, breaks through that speed bump, and we would likely look for a little bit of a push lower, which we already know will likely be all the way back down here to the blue shaded area. Again, you throw in other tools like we have talked about. You could throw in some Fibonacci here from the low to the high. That also puts the 0.236 fib all the way down here into the 127.90s. That's down closer to the blue zone. So if you're using Fibonacci as a tool, you've already identified a retracement level that becomes a potential support. Interesting enough is it sits right there at the blue shaded area. Another Fibonacci from the low here to the high. Again, Fibonacci is a somewhat of subjective tool, depending on the time frame and the zone, the ranges that you're drawing. But if you just take it of that short range right there, zoom it in a little bit, just of that short range, you find the 236 right at the purple shaded area, and as it approaches the blue shaded area, we can see that the 618 of that shorter range sits down there at the blue zone. We've identified historical support and resistance based on naturally recurring price action and where the market has made its decisions to enter and exit the market before, and now we've used another tool like Fibonacci to confirm some of those levels. So all of that becomes an opportunity to look for new trading opportunities in the market. And if it breaks through a support, we look for it to sell in potential reversal. As long as it sits down on top of it, we look for buying opportunities that are in the direction of the trend. One more. Let's take another peek at another currency pair, the pound dollar. We have been trading this one also for the past couple of weeks. Again, we can take tools like the horizontal line, but we could also look at these diagonal levels of support. Diagonal levels of support, again, become those decision points where the market is buying, selling, entering, or exiting the market. We can begin to throw in some horizontal levels of resistance and support. And again, you take a look back here to the left, you can see support back here. And I'm looking all the way back here where the market found some support back here. So does the market repeat itself over time? Well, all I have to do is get our little highlight tool and say, back here was support. It got underneath it. It became resistance. Once it got underneath that level, we can look right here and find resistance. We can continue to move it on over, and that's where the current market is holding a resistance. And we've talked about that this week in the trade room, that right now we're in a little period of congestion right there. Let's take it on down to the 4-hour chart. You can see the market bouncing around between 55.60 and 56.35. So right now, if you're buying in the direction of the trend, it's more likely you're buying as it dips towards the bottom of that purple shaded area into our support, or you buy it on the breakout of that resistance. Remember, buy support, break resistance. The trick here in all of this is identifying where these levels of support and resistance will be. Now, I could also get this a little bit more detailed, and I often get asked this in the trade room. Is there a way to make this a little bit more detailed? Well, right now we can take this on the 4-hour time frame. Now we can squeeze that in like there, and we can pull this down to about right here. And now we can say on the 4-hour time frame, this is beginning to show us that this is our barrier of support down here. And I'll change the color of that back over to the yellow shaded area. So now we know where our support is, where our resistance is. Where are we going to buy? If it's an uptrend right now, if this is an uptrend, which it is, I'm going to put another trend line in here, where are we looking to buy? We look on buys on dips to support or break of resistance. So no matter what other tools you're using, moving averages, Fibonacci, stochastic, MACD, whatever other tools you're using, remember, buy low, sell high helps you find low risk and high reward decisions. Right now, you know that if it breaks the yellow zone in that short red trend line, it's likely going down. It stays above it, the expectation and history shows us it potentially challenged the purple zone. Above the purple zone, we're probably heading back up here into the 5750 or so level, becomes the next barrier of resistance. And we can go back in time and just highlight that right here. So all it is for me is about identifying the barriers and where I can find low risk and high reward entry decision points. And then again, like I said, if you throw in other tools, it just adds other evidence. Remember, you're the trading judge and you're expecting the market to present evidence to you to a particular outcome. And that's what any indicator is, whether you're looking at support and resistance, trend lines, Fibonacci, stochastic, MACD, Bollinger Bands, volume, moving averages, whatever you're looking at, you're expecting the market to present evidence to you. And that's what we're looking for on a daily basis, is evidence of support where the market, the big money, I don't mean you and me as smaller investors, I mean the big money, the people that are causing bullish and bearish, the people that are causing red candles and blue candles as you see on my chart. Those are the ones we want to emulate. So we can see that over the past several days, they have found support in the upper 5500s. They have found resistance in the mid 5600s. So we know we want to do something very similar in the direction of the trend. That means buying the yellow zone or a breakout above the purple zone to target the next zone higher, which will be this area up here, and let's just make that green. So that becomes the next potential target. How do you stay in trades? Well, you trade between the decision points in the market. If you buy the yellow zone, you target the purple zone, then you target the green zone. If you happen to sell at any of these levels, you just target the next level lower. And again, I could take some Fibonacci in here to prove that these levels are valid as naturally recurring barriers. Let's just take from the low to the resistance high. We can see the 382 sits here at the yellow shaded area. That gives you a little bit more confidence in that. You take Fibonacci from just the most recent low to the high, and that puts the 50% of that range right here at the yellow zone. So we can see that. We can get a little bit more detail by placing another shaded area somewhere right about right here, and we can see that in a smaller time frame that this has been now becoming an area that we want to make a potential trading decision also. So we can highlight these areas of support and resistance without too much difficulty. And I do this on a daily basis in my free daily live videos that I provide. Let me just skip back over here to our PowerPoint presentation real quick because I want to make a couple of notes for you here before we wrap it up for the day today. You know, the trick to using any indicator, whether it's support and resistance or Fibonacci or trend lines or stochastic or MACD or any other indicator, the trick to using any indicator is to use them correctly and consistently. Trading is about probability. The more indicators that you use, that point to a particular outcome, you know, the higher the probability of that outcome that it will occur. At the beginning of the presentation, I suggested that you pick a few indicators to master. That's because when they come together to point to a single outcome, your confidence is increased in that outcome. If you have two indicators pointing up and two pointing down, you know, that's kind of 50-50 shot. But if 3 or 4 are pointing in one direction, that's when probability is increased. You can think of indicators as bricks in a wall, or maybe like a barrier, like I mentioned before. One brick doesn't make such a great wall. 2 bricks, a little bit better. 3 bricks are better, and 4 bricks, well, I think you get the idea. The more bricks, the better. And the more indicators pointing to the same conclusion, the better. Now, picking out support and resistance like I've been doing today, and even trend lines for that matter, is often more of an art than a science. Finding exact levels rarely happens. More often, it's a level of consistent congestion rather than a single wick or a candle. And you'll probably hear different traders that use different methods of identifying and drawing these lines like I've been doing today, and that's okay. But I would suggest that you find a method that makes sense to you and works for you. Whichever indicators that you settle on using, find a method that works represents what the indicator is trying to identify, whether it's volume or momentum or trend or whatever, and be consistent with it. If you're constantly changing the way you use an indicator, it's really going to diminish its value. Now, once I've identified the main trend or directional focus and any barriers that I find significant for the day, really it becomes a waiting game. You know, most of the time, trading is waiting for levels to be reached before entering and exiting a trade, or waiting for the right signals or opportunities to develop. However, trading, like I said, is an activity. It's not a spectator sport, and really you must actively participate in the market. Or at the moment when the price and indicators converge and the opportunity arises, you know, you might miss it. And it's hard to do sometimes. I know, I've been there. If you don't know what to look for, or you just don't have the time to devote to studying the market, that may be a difficult thing to do. You know, I've been there. Years ago, I would sit in front of my computer and look at the charts and ask myself, now what do I do? So this is really where I come right back to where I started at the beginning of the presentation, back to the basics. Tell me and I forget. Show me and I may remember. Involve me and I will learn. You know, learning to be a successful trader is really a journey, but it's a journey that I think is worth the time and the effort that you put into getting there. And each of the levels that I've been trying to identify for you today, or show you how to identify, is really a decision zone. And really that's what it all boils down to. Using indicators, using tools like support and resistance or trend lines or Fibonacci, you're trying to identify a decision zone where you're looking to get in and get out. Now the tools that you use, like I said, and even if you wanted to use fundamental analysis as part of your strategy, still, even using fundamental analysis, those types of traders are often looking for a point of entry. And that's really what I'm trying to identify using support and resistance, is a point of entry. Not just randomly buying because it looks like it's going up, or randomly selling it because it looks like it's going down. We want to identify low risk and high reward decision points. And that's what we're trying to do. If you buy into support, you know the risk is, of course, that if it breaks underneath that support, it's going lower. So you can identify the risk. You can say, I'll place my stop loss under that support. If you're basing your long trend or your bullish trend on a fundamental analysis, still buying support helps you find a lower risk decision point to get into the market. Whether you're using a tool like stochastic, where it's at the bottom of the oscillator and starting to curl up, it's still going to give you a lower risk opportunity to get into the market when it dips into support. Or if you're at the top of the oscillator, let's say you're using something like RSI and it's at the very top of the oscillator and it's starting to curl down and you're looking to sell it in the direction of a momentum shift to go back down, you still would rather sell resistance to provide you with a lower risk opportunity to get into the market. Okay, I've said a lot, and you probably have a ton of questions about what I've been talking about. How do I find these levels of support and resistance? And we really are running out of time as I continue to ramble on about these are decision points in the market. What I want to do is go ahead and put up our link here that will provide you with the opportunity to join in with my free daily market analysis. If you go to that link, and I'll see if I can grab that link and put it into the window there for you. Give me just a second to copy it over here. I don't know if Reed has it or not, but if I just give me a second, I'll put that link in the window. But that link right there will give you access to my free daily analysis video where I go over kind of a heads up for the day today, or the day that we have there. And let's see, there it is right there. So I've just posted that link in there. That's actually the wrong link that you're seeing on the screen. That's the link that I just posted into the chat. There's the link right there. Let me see if I can post this somewhere else. Give me just a second here. Sorry about this delay here. This is the link you're seeing on the screen is the correct one. Sorry about that. Just trying to get that in there. Anyway, sorry about that. There's the correct link that you're seeing right there. In the free video on a daily basis, I will cover the analysis of one or more pairs that I'm watching to trade for the day. recap of the trades from previous days and the specific trade setups that I'm waiting for to enter the market. Basically, what you can do with these free daily videos is look over my shoulder as I show you how I arrive at these decision points, these areas of buying and selling. So I thank you for joining me. Looks like I am just about out of time. I don't know if we have any time for questions, but I think we are just about out of time, and I'm going to say thanks for being here. Join me on for my webinar today, and I look forward to talking with you again sometime. Thanks.